this is something that does worry me sometimes, which is the perceived notion that Chinese investment is taking control of Peru completely. And this is something that one has to be mindful. You probably heard of the Chancay port, which started last November when we hosted the APEC meeting, and President Xi went to Peru. And the key administration, someone linked to the current administration, the former IDB president, Mauricio Claver Carone, he said, no, any product that passes through Chancay should have a 60% tariff. And all the alarms were set. What's going on? And this is a port that's just beginning. But I think one needs to put the issues in context, because there's a lot of Chinese FDI going into mining and to energy, to infrastructure. But still, if you look at the stocks, Chinese FDI represents 5% of total investment, which is a fraction of the investment that comes from European countries, Chile, and the US. So I think one needs to be quite cautious and quite clear with the data that China is growing in its presence in a diversified manner, but it's not really the main source of FDI in the country at all. And the flows, yes, but not looking at stock levels. And the port of Chancay is a source of potential tension with the US, given the promise that this port has in terms of reducing logistic costs between Peru and really South America with China and Asia more broadly. This is something that's just beginning. There's 1 day a week that Chinese cargo goes from Chancay to Shanghai. This will grow in time. But the promise is really the Brazilian market and the production from our neighbors towards China. And as a matter of fact, as a smart decision made by the investors, is that the scanners, the custom scanners, were donated by the US so as to give more comfort, so that there were no other business beyond trade going on. So I think this is something that has to be appropriately mitigated and managed with the right information, not to fall into sort of a fight between the giants and Peru in the middle. No? And this is something that we obviously want to avoid. And thankfully, we have a very diversified set of trading partners. The U.S. represents around 13 or 14% of our market for exports, which means that 87% goes to other countries. China, obviously, is our main trading partner, and it's primarily commodities, copper, among others. But we have a set of very diversified trading partners. And the interesting thing is that we have a lot of free trade agreements in force, or free trade agreements that have been, now they are less binding than we thought they were. But still, this is a source of competitiveness, and more than 80% of our trade, with the world, has some preferential trade agreement. And this is something that is very important, and Peru is still pursuing. The last agreement that came into effect was with Hong Kong. The Chinese FTA was optimized. I think they reached a negotiation with Guatemala last week. And this is a continuous fact of pursuing trade agreements with our partners. And this will help us deal with, a more closed economy, national, more protectionist winds blowing in the world, not only because of the US, but in general, in different industrialized countries.